How do you play the memory boom without chasing these data storage stocks? The four big players in the space, Micron, Western Digital, Seagate, just reported, and SanDisk, each one tripled last year, and they keep running in 2026. Just since the beginning of the year, SanDisk is more than double. The other three are up anywhere from 35 to 50%. I don't want to chase this. I don't chase the storage and memory plays because even though there's a severe shortage of this stuff thanks to the data center build-out, it really doesn't take much to derail these commodity chip makers. Maybe the Korean competitors like Samsung, SK, Hynix will expand their production capacity without our knowledge. Maybe the hyperscalers look at the sky-high prices of memory and data storage products and decide it's time to dial back their data center investments. Possibility. We'll find out soon enough. Even the smallest disruption could crush these stocks. I've seen it happen so many times before. Given how much they've already run, if you don't already own them, let's just say I think you're too late. But there is a relatively safer way to play the same theme. These are not safe stocks, but safer versus those others. And that's the semiconductor capital equipment plays. Whenever there's a chip shortage like we have now, sooner or later, these companies start buying more manufacturing equipment in order to boost production. That's why ASML, Applied Materials, KLA, and Cramer fave Lam Research have been roaring, because people know that they'll have big orders as the year goes on. The big four semiconductor capital equipment makers rallied like crazy last year. They're up anywhere from 29 to 39% just since the beginning of January. You're not early, but they haven't run nearly as much as the storage and memory makers. So relatively, they've still got more room to run. Plus, I think this industry has a lot more going for it. 2 weeks ago, Taiwan Semi, the world's largest semiconductor manufacturer, reported a total blowout quarter. More important, management said that the demand's on fire. They plan to invest heavily in building out their production capacity. For this year, Taiwan Semi guided for $52 to $56 billion in capital expenditures. That would be up 27 to 37% from last year. Wall Street was expecting less than $45 billion. When management was asked if that would be enough to fix the chip shortages, their answer was a clear no. Taiwan Semi doesn't see supply and demand coming into balance until 2028 or 2029, so they're planning to keep their capital expenditures high for the next few years. Again, great news for the semiconductor capital equipment makers. Now, the specific commentary was about Taiwan Semi investing to meet demand for AI semiconductors, not necessarily memory or data storage chips. But if anything, that's better for the capital equipment makers because manufacturing AI chips requires more advanced hardware. ASML is best positioned for this type of leading-edge equipment, but all of the big four semiconductor capital equipment companies participate in the market, which is why they all had such huge gains in response to Taiwan Semi's quarter. Rational. We got another big clue the very next day, when I got a chance to interview Sanjay Mehrotra, the CEO of Micron, what a stock, what a company, on Squawk on the Street. That's when Micron broke ground on a $100 billion semiconductor foundry in our state, New York. While that facility won't be up and running until 2030, you better believe it needs equipment. On top of that, Micron's working on a new fab in Boise, Idaho, which will begin adding output by the second half of 2027. Micron also broke ground on a new fab in Singapore yesterday. That should start producing in the second half of 2028. Dizzying, right? The key takeaway, Micron's investing in new production now, and it'll continue investing in new production for several years into the future, which means consistent orders for Lam Research, KLA, and Applied Materials. Buy. Finally, when Intel reported last Thursday, the stock got clobbered. Remember, it was down 17% on Friday, another 5% on Monday, before stabilizing today. That's not because the numbers were bad. The quarterly results were actually quite good. Instead, Intel gave dismal guidance because they just don't have the ability to meet the demand for their chips. From my own reporting, I've found out that Intel simply doesn't have enough manufacturing equipment. It didn't predict the strength of its own markets correctly. Again, as with Taiwan Semi, this isn't about memory chips. In this case, it's CPUs that Intel can't make enough of. That means more business for the capital equipment makers, especially Lam Research. CPUs are the bread and butter. Lam's also one of the leading providers of the type of equipment used to make memory chips, so they'll be one of the first companies to benefit as the memory and data storage companies look to boost their productions, which I know they want to. That's why this stock rallied 137% last year before tacking on another 39% gain in January. Now, some of these semiconductor capital equipment companies will be reporting earnings in the next few days. ASML reports tonight, overnight, from Europe, so we'll have numbers when we get in tomorrow. Lam reports after the close tomorrow. KLA reports on Thursday night. Applied Materials we don't hear from until mid-February, but while I expect all these companies to report great numbers, the bar is now incredibly high, given how much their stocks have run. So I can't say for sure how their stocks will react, as they are what I say coming in hot. that brings me to a very smart analyst note from Lynx Equity Strategist that came into my inbox. It was published this morning. The Lynx analyst says that a beat and raise result is already baked into Lam Research stock. I agree with that. It's hard to argue with. But the analyst is still very bullish on Lam, and that's because they expect much better numbers in 2027 than the rest of Wall Street's looking for. I agree with that. If management gives a qualitative view of wafer fab equipment into 2027, and we hope that not everybody is starting to build out at once, the Lynx analyst argues that the stock could soar. Otherwise, he expects it to sell off because it's up to 39% over the past few weeks. If Lam Research does sell off, though, that may be the real opportunity. I would be a buyer. I believe in this group long term, and Lam is my personal favorite. It's incredibly well run, and its antecedent, Novellus, for anyone who watched the show all the way back in 2005 to 2012, was my favorite semi-cap equipment company of all time. Here's the bottom line. If you want to play the memory and data storage without chasing stocks that have tripled or quadrupled in barely more than a year, I think the semiconductor capital equipment makers will be more durable winners here. I think Wall Street might not fully appreciate the long-term capacity expansions coming through the entire semiconductor ecosystem. While I don't know how these companies will do when most of them report this week, that doesn't interest me. I hope the stocks pull back, because then you've got my blessing to buy them for the long haul, which is what we care about on Mad Money. Mad Money's back after the break.
Coming up, gold and silver have soared to record highs. But could the metals market be heading for a meltdown because of it? Cramer's going off the charts to find out. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.